All right, welcome everyone. My name is Rachel. I'm the president of PreMedCC, a student-led organization established in the fall of 2021. Our goal as an organization was to create an online program for pre-med students at community colleges and universities with the hope of guiding the next generation of diverse and inclusive physicians. We know how challenging finding mentorship can be, especially in the middle of a pandemic. And while we advertise our organization for being for community college students, our events are free and open to anyone. So we realize how challenging mentorship can be to find in a pre-med journey, especially for first-generation med students, people that lack the financial resources, or just those that don't know anyone in the medical field. And one of the best parts about our events is that they are virtual, so you can do it from the comfort of your own home or wherever you are. We typically have our events on Fridays from 5 p.m. to 6:30 p.m. Pacific time, and occasionally on Saturdays. And if you aren't able to attend our events for any reason, such as school or work, all of our sessions are uploaded on YouTube. And after you have attended our event, you can log on to our website and complete the quiz, which will contain questions pertaining to our event today. And if you score 70% or higher on the quiz, you will be awarded a certificate for your attendance today. And students that attend all of our sessions this school year will receive a scholar award for all of the hours of shadowing they have completed. And if you want to stay connected with our upcoming events or want to tell your pre-med friends that are struggling to get shadowing hours about our organization, that would be amazing. All of our social media accounts are at PreMedCC. And Jubin is showing a couple of our upcoming events as well. And you can stop sharing and I will introduce our speaker today. Today we are joined by Martha Trujillo, the Director of Financial Aid at Stanford Medical School of Medicine, a position that she has held since 1998. Over her career, she has helped countless students balance their desire to become a doctor while minimizing their debt. She has been nationally recognized for her work. Ms. Trujillo has also served on various AAMC task forces, including the AAMC's Working Group on Educational Costs and Debt. She has shared her expertise at many pre-med workshops. We are very excited to be joined by Ms. Trujillo today.
Thank you for that introduction. It's my pleasure to join this PreMedCC group. I've always tried to promote individuals going into the health professions. A little background is I actually started my career working at a community health center here in Santa Clara Valley in San Jose. And that in itself inspired me to pursue at first what would have been a health administration career, but it transitioned into working at a medical school and then becoming the medical school director of financial aid. So intertwined with everything else, I do have a passion for promoting medicine, especially in underrepresented communities. So with that, I will start my share of my presentation. And let me know when you see it, hopefully. Is it there yet? Nope. Okay. So I apologize. Let's see. It is not wanting to share. I see. What am I sharing? The sick for 40-minute time limit?
It says paying for medical school education.
Okay, great. Thank you. Thank you all for joining me again. Again, my name is Marty Trujillo. I'm the Director of Financial Aid at the Stanford University School of Medicine. And while this is going to be a general presentation, I will use references to Stanford and the Association of American Medical Colleges, which if you're not familiar with that website, I will give you the information on how to access this and to become familiar with it. So with that, I think what I have is just 4 general points that I will be covering today. Where to start? This is a process and it takes time. As an education is a process and takes time. So financial aid, you have to learn as well. So we're going to start off by reviewing the cost of a medical education. That is the price tag. We're going to review and understand various financial aid resources and options that are available to you to finance a medical education. Review the application process. And then finally end by reviewing some of the myths and questions that you need to ask about financial aid, which will be helpful in your journey as well. So understanding the cost of education, this is the price tag. So according to the AAMC's 2021 graduating questionnaires, these are the students that graduated in June, the 73% or 3 out of 4 students actually had to borrow to finance their medical education. And the average or the mean medical debt for these graduating students was $200,000. So when I look at the Stanford School of Medicine price tag for 4 years, it's approximate tuition and fees and living expenses or close to $450,000. So, and the average debt in the country is $200,000. But at Stanford, our graduating debt for this past class was $105,000, a little bit over half, less than half the national debt. And we can go into the differences about that. And this is just hot off the presses as well. This is called the FACT card. It's published by the AAMC and it's available at the website that I'll share with you. And it'll, again, go over the percentages of students that borrowed. It also gives you information about pre-medical debt, because many students will go into medical school with pre-med debt and then also accrue additional debt as medical students. So this helps you compare some of those figures and what the national averages are. Again, there's these are average or mean, so there'll be people above the curve and below the curve. So this might or may not represent you. And again, it also compares public versus private, and also gives an average for all schools. So as you contemplate where you're going to apply to medical school, many students will want to stay local, like in their state. Others will venture to go to national schools across the country, like at Yale or Harvard or Duke or Chicago. So, there's many options. There's over 145 medical schools in the country. So there are many options as to where you're going to apply. And, those personal choices will be yours to make. So now we're going to go into understanding the cost of attendance and variables to consider. So I mentioned private versus public. And so with private schools such as Stanford, it's a private nonprofit. It is a high cost school, yet as I mentioned earlier, we are able to graduate students with half the national average debt. And you ask, well, private is more expensive, so I'm not going to go there because I'm going to graduate with a huge bucket of debt. And public is less expensive, and I'm going to graduate with less debt. And that is really a fallacy, because public schools, such as big institutions like Stanford, have a generous endowment for need-based aid. And what that means is that it can offer scholarships and grant funding to offset your educational expenses, thus reducing your borrowing. While as public schools may or may not have endowments or grants available to you. So when you're looking at individual schools, it's really important that you understand that private is not more expensive necessarily in terms of debt, and public isn't cheaper. So things for you to consider. And of course, in state versus out-of-state tuition, if there's many medical schools in California, state schools, that you pay an in-school tuition fee. And if you go to, let's say, Oregon Health Sciences, you would pay an out-of-state tuition fee because it is a state school. So, things to consider is, should I stay in state? Is it going to be, am I going to get a better deal, or am I going to venture out and, just apply to medical school and go to wherever I can get it? Those are things that you'll need to think about. Also, other variable costs is, on campus versus off campus. Are you going to live in dorms? Are you going to share housing, et cetera? And are you going to live at home? So there's lots of options that you need to consider, which really drive the total expenses that you'll have in medical school and the choices that you make as whether you'll need to borrow more or not. So in the cost of attendance, there's what we call the fixed costs, which are usually tuition, which are fixed. Everybody pays the same amount, year 1, year 2, year 3, year 4. And tuition can be, as I said, fixed, which is it's the same cost every term, quarter, or semester is the same amount for every year of the 4 years of attendance, or it can grow every year. So there are schools that guarantee tuition at that same level for 4 years. At Stanford, we tend to increase our tuition by about 3% every year. So it really varies from school to school. Again, giving you information to think about as you're exploring medical school options. And then there's other required fees. For instance, a matriculation fee. At Stanford, for med students, first-time enrollees at Stanford University are assessed a $250 matriculation fee. And really that fee covers transcripts, it covers the cost of the diploma, and et cetera. So it really has to do with more or less with fees associated with the university support. But other schools may have other fees. They might have other campus health service fees or lab fees, et cetera. So those are fixed costs that will be assessed to everyone. Then let's explore the variable costs. So I mentioned room and board. And so room and board will be a general standard budget for each student. So you don't get to pick and choose. I'm going to live here, so, and I want more money for my cost of attendance. There's generally a standard budget for all students, which are on campus and off campus. So whether you live more frugally because you share an apartment on campus, or you decide that you need to live alone because that's your lifestyle, you're going to pay for that difference. So the housing is really the biggest area where you can make an impact on your total expenses and therefore your total borrowing. Food, of course, is another one. Whether you are somebody who likes to cook and eat at home and pack your lunches, or whether you buy your Starbucks or whatever your coffee is in the morning and then eat in the cafeteria and then dine out, that will quickly become a big expense for you. So food is really another area that you can economize on. And especially if you live in a group housing, you can share the cost of food. And then personal expenses, of course, this has to do with, giving up your gym membership or things of that nature that, you have been able to do because you had maybe the flexibility, you're working right now, and that's something that you want, but it might be something that you should give up because you're going to be taking loans to pay for that. So that doesn't make a whole lot of sense. Another area of variable costs, which can be really costly, is health insurance. So certainly if you are coming out of undergraduate school, community college, then undergraduate, you may still have coverage under your parents' insurance. If that is an option, then you're going to save on paying a premium. Some students elect to go, if eligible, to the Medicaid program, the Medi-Cal program here in California, and that covers their healthcare services to a degree. And then, of course, there's the option of purchasing the school's insurance plan, which can be costly. I think we at Stanford, I must say, have a very expensive health insurance plan. It's over $6,000 for coverage for 12 months. So again, if you're covered under your parents' insurance or a spouse, let's say you're a non-traditional student, you're married, you have family, you have a working spouse, and have that coverage, that also would help save on expenses. Books and supplies is another area. So, do you need to buy a new book from the bookstore, or can you go online? Many schools have, within the student body, they share resources, and so you can do a book exchange and buy a book if that's what the course is still using. But actually, many syllabi, et cetera, that are available are online now. Everything is online, so books are not as popular as they used to be. The other thing is technology. So I would assume that just about everybody has a cell phone and probably a laptop and maybe even an iPad or a tablet. But in schools these days, those are almost required. So you need to understand that either come into medical school with viable technology, or you're going to have to take out a loan if you need to purchase one. Another area is clinical instruments. So clinical instruments are, the stethoscope, the otoscope, the percussion camera that you use to get reflexes, and those things are called, you would need to purchase if you were starting your clinical rotations or going on any early clinical experiences as a preclinical student. And then, of course, the final one that I like to add is transportation. If you're living on campus, let's say you have a school such as Stanford that has a medical school which is on a campus and the housing is there, then you could probably get to your courses, your classes on a bike or on public transportation or even walk. But if you live off campus, then you might need to take public transportation, which is not always reliable, and then you will need to, if you have a clerkship in your clinical years, let's say, using again Stanford as an example, we have an affiliation with the Santa Clara Valley Medical Center in San Jose. We're in Palo Alto and Stanford, and the school and Santa Clara Valley is about 25 miles away. You can get there in public transportation, but it'll probably take you an hour and a half each way. So many students will lease a car during their clinical years if they were doing rotations away from Stanford. So, you start thinking ahead a little bit about, these types of issues. And, whether it's, maybe in your clinical years, your family can loan you a car, that you don't need to buy one. So again, think a little bit outside the box. Oh, and finally, in your final year of medical school, as you apply to your specialties and to your residencies, you will need to buy airfare, potentially travel to multiple sites to interview. Right now, everything's virtual, but I think we're going to return to virtual for many of the residency interviews. So even though you're not using those funds now, you might want to start banking some money for your final year so you have a nest egg, so you're not borrowing at the end. So again, those emergency reserves or specific reserves in cash are always helpful. Okay, so let's transition to the next area. Additional variable costs. These are things, again, for non-traditional students, assuming that some of you may have children. So you will need dependent care allowance if you don't have a working spouse or partner. And then childcare allowance. Let's say you're a single parent and you're going to medical school and you need both of these. So each school will factor these in. These are not part of a standard budget, and you do need to reach out to your financial aid officer, the schools of where you're applying, to make sure that if these expenses, and these are allowable expenses, then you can potentially take out additional loans to borrow for that. So some things that are excluded. So as a graduate student, most schools do not give you money for a holiday visit home. There are, as an undergraduate, if you're going to a four-year college, which I think most of you are in community college, so those are local. But if you were a four-year college, they don't give you funds to go, like one round trip airfare to go home. But you're going to be in medical school, and graduate schools, they don't add that to your budget. So again, within your budget, you have to find, if you're getting full financial aid, whether it's scholarship and scholarships or combination scholarship and loans or only loans, you'll need to find ways to economize those funds so that you can then use them for these discretionary expenses that you might have. And then at the end of your training, of course, let's say you attend UCLA and you decide to go to Colorado to do your residency. So now you're going to need to relocate. And those expenses are called residency relocation, and those expenses are not covered by financial aid. There are private loans available for those, but those are you decide that at the time when you decide where you're going to go for, or when they decide for you where you're going to go to do your residency, because it is an application process. And then, as I mentioned earlier, a purchase of a car. While most schools will give you a transportation allowance within the standard budget, we do not allow for a purchase of a car. Our transportation allowance, we call it clinical transportation allowance, does allow, it inflates the transportation budget a little bit because we understand that students may need to travel to these remote clinical locations, and they might be able to lease a car, but a purchase is not allowed. So we would not give you additional funds for a purchase of a car. And I want to say is at the end of this presentation, I do have, the myths and the FAQs, the 10 FAQs from the IMC's website. And then after I review those, if there are any additional questions, I am certainly happy to answer those. Okay, so sources of support, you and your family. So I always encourage anybody who's thinking about a medical profession to talk to your family about what it's going to look like once you've done all the exploration. When you're applying for financial aid, and I'll go into this in just a moment, but there's need-based financial aid, and schools define what need is, and then there's merit. Need-based financial aid is the school or the institution will look at you and your family's ability to help finance your education. So the first point of support is going to be you, and then usually the school will backfill with scholarship and or loans to the degree needed. And then there's merit. Merit-based scholarships are where you've achieved something, you're the best at something. It could also be like a diversity scholarship, which is merit-based in itself. So you can come into a school saying, you're going to get a diversity scholarship, but those aren't really need-based, and it's based on certain attributes that you're going to bring to the institution. So the additional support are scholarships. There's external scholarships, school-based scholarships, and service-based. And I apologize, I wanted to give some examples here, and I'll go through these external. And as I went to see if these hyperlinks worked right before the meeting, they did, but they changed the color. So it's a little off here. But I wanted to give some examples of
I'll put them in the comment section for you.
Okay, yeah, these if you're going to publish this PowerPoint, which I'll forward to you, these do have the hyperlinks, so students can click, and if they got an underline, they can go directly to these websites. So I did want to give a couple of examples of external scholarships, school-based, and then service-based, and I think well, I'll go into that in just a second. So again, these are scholarships that offer at least $5,000–$10,000 a year. Some of them are renewable, some of them are not. Some of them are specific to schools. But I just wanted to give you an example that there are some out there that can really provide some good support for you. The Weigel Medical Scholarship is actually a scholarship that is offered by the ELKS organization, which is a national organization, service-based organization. And they offer scholarships for medical students for up to $10,000 a year. The SAMVID Scholars, this is it's an absolutely brand new scholarship that we have. Our first student at Stanford got it this year. And I said, I've never heard of this scholarship. And they said, well, this is the inaugural year. It's the first time it's been offered. And I went, wow. So it's $50,000 for 2 years. That's $100,000 for tuition, towards tuition and fees. So SAMVID Scholars, again, it's SAMVID Ventures is the sponsoring organization. Again, the hot links are there. Another big one is the Paul and Daisy Soros Foundation for New Americans. This is for students who are either currently naturalized or their parents immigrated to the United States and have become naturalized. This scholarship offers $45,000 for 2 years. That's $90,000 for 2 years. So again, another great opportunity if you fit into that category. The Jane M. Perkins Foundation Scholarship. This is interesting because it only is offered to 5 medical schools. Stanford is one of them. USF is another one. WashU in St. Louis and University of Washington, upstate Washington. There's one more that I can't remember. But again, this is a $10,000 scholarship. And then the Tylenol Future Care Scholarship is another one that is open to anybody in medical school. There's a couple other that are not here external. It's kind of a hybrid. I could say school-based, but hybrid. And I did talk a little bit about merit and need-based in the prior slide, so I'm not going to go into that. But I do want to say, like, UCLA has the Geffen Scholarship, which is a full ride at UCLA. So that's definitely a great scholarship to get if you can get accepted into UCLA School of Medicine and also get the Geffen Award. At Stanford, we don't have like a merit-based financial aid within the medical school, but the university has the Knight Hennessy Scholars Program. And this is just an absolutely fabulous program because it is not need-based, it is merit-based, and they want to fund the movers and shakers that are going to change medicine. And so, they spread their net widely, and they fund students tuition, fees, and stipend for 3 years, after which any additional time at the medical school will pick up the final 2 years, up to 2 years. So a total of 5 years potential, and that's at no cost to the student. So, but the caveat is that you have to apply to and be accepted by the Knight-Hennessy, and you have to apply to and be accepted at the medical school, at Stanford Medical School. And you can't transfer this to another institution. This is only for use at Stanford. So again, this is an example of how there's just a lot of resources out there that you just might need to, spend a little time and homework if you're seriously pursuing a medical career and looking at that high price tag. These are great resources to offset those expenses. And finally, there's the service-based bucket. I believe you had a presenter from the Armed Services. That is the Uniformed Armed Services Military Medical School. It has an acronym, which I don't remember. But again, these are open to both domestic and military. But once you join, you will become a commissioned officer in the Armed Services. And you have a service obligation. They pay for your education. You pay with their service. Similar Armed Services is the Health Profession Scholarship Program, and the military medical school is the one that I was referring to. And there's only one school in Bethesda. And then the Armed Services are scholarships. So you apply to these scholarships. They pay for 4 years of medical school. And then after you graduate, then you pay back that scholarship with your service as a attending resident and attending in a service base, hospital or otherwise. National Health Service Corps. Again, this is National Health Service Corps. They will pay up to 4 years of medical education, and you pay back. And this is primary care. So they are interested in funding individuals who are interested in primary care, which is like emergency medicine, pediatrics, general internal medicine, geriatrics, and OBGYN. Those are examples of what primary care is. Not surgery, not ophthalmology. None of those qualify for National Health Service Corps. So if you get a National Health Service Corps scholarship and decide to go into specialty, guess what? You're going to owe the money and you'll get penalties. And so it's something that you're going to sign a contract and you need to pay close attention to the specifics of that contract because it is binding. All right. Okay, let's talk a little bit about loans. There are basically 3 buckets of loans. The federal direct loan program, Department of Education funds them. Several years ago, most of the loans offered to medical students were bank-based loans, Wells Fargo, Citibank, PNC, et cetera. And everybody was vying for your business. But right now, all the loans that are offered through the Department of Education are federal direct loans. And what's available to medical students are the unsubsidized and the Grad Plus loan. The unsubsidized loan does have both annual and aggregate loan limits. So, and this is for your total education. So if you went to undergrad and took out a subsidized loan, now a subsidized loan is not available for graduate students, only the unsubsidized loan products under the federal direct loan program. But if you had a subsidized and maybe some unsubsidized as an undergrad, and then piled on additional med school unsubsidized, the maximum total amount with those 2 programs that you can borrow is $224,000 for lifetime. Anything above that would go to the next loan, which is the Graduate Plus loan. It's also an unsubsidized loan, has a higher origination and fee and interest rate, and it does require a credit check. So if you, let's say, are going to need to borrow and don't land a scholarship, and you're going to finance your education with federal loans, you potentially can. You don't like to see anybody do that because that's very expensive. But the graduate loan program will require a credit check, which means that you need to make sure that you don't have any derogatories on your credit history coming into medical school, because if you need that loan and they do a credit check, you might be denied. It's not guaranteed. And if you're denied, you can reapply, but it might require a co-assignment. So these are little idiosyncrasies of the federal direct loan program. And I'll give you a website where you can get more information on those as well. The next one is the Health Resources and Services Administration's Healthcare Workforce website. These are school-based. Well, it's HRSA funds the money, and these are both health-related, non-health-related, but the schools have to participate in these programs. So it's not something that you apply online for. The schools will apply on your behalf, as is true with both the federal and the HRSA loans. So if schools actually participate in these programs, there are loans for disadvantaged students. Those are subsidized. Subsidized mean no interest while in school, and then in repayment, 5%, which is pretty reasonable. The Health Profession Student Loan is another loan program. Again, for students going into health professions, schools must participate in this loan program. And a primary care loan. And as the name implies, schools that participate in this loan, excuse me, my names is running. Schools, primary care is that you again are pursuing a primary care career path, and that's who they want to fund. And in the private loan bucket here, we have institutional loans. So some schools actually have scholarships and loans that they offer, as we do at Stanford Med. As an example of our loans, we offer, let's say, $2,000 a quarter. There's certain criteria that applies, of course, and $2,000 per quarter, 0% in school, 0% in residency, 0% in repayment. So you borrow $2,000, you pay back $2,000. It's a great loan, and there, different schools have different criteria, so you do want to look at that. Bank-based loans. So let's say you are offered a federal loan, but let's say you have a relationship just off the cuff, let's say with Wells Fargo. And Wells Fargo is your unsubsidized loan has a 5.8 interest rate, and Wells Fargo is offering you a 4.0 interest rate. And you say, well, why would I borrow a federal loan if I could borrow a bank-based loan at a lower interest rate? And here's the reason why you wouldn't want to do that in most instances. Again, finances are very, very personal and specific. But in federal direct loans, those are basically your loans. There's different repayment options. There's different forgiveness options. And in the event of disability or death, those are discharged, which may or not be the case with private loans. So again, really understand the pros and the cons of each loan product that you might be taking out. And family loans, I said, financial aid starts with a discussion with you and your family. And, whether you have wealth or you don't have wealth, your family can provide a lot of support, or at least, if it's not financial support, moral support. But if family loans are an option, do understand that if they do support you, I highly encourage you to, write up a promissory note saying, this loan is for this purpose, and I promise to pay back at whatever. I just think that that's, slippery slope to go down when you mix borrowing and family, but it's something that I would certainly think about if you're possibly going to be borrowing a large amount of money to finance your education. I had the federal Perkins loan up here. And the federal Perkins loan is no longer available. I just wanted to mention that it might have been available as an undergrad, but it's no longer available to graduate and professional schools. So that would have been a subsidized loan. And again, subsidized is no interest while in school. Interest accrues after you complete your degree, similar to the federal direct loan program. Okay. And let's say you do end up borrowing a substantial amount of money, let's say $150,000+. There are loan forgiveness programs that you may want to participate in. The Public Service Loan Forgiveness Program is the one associated with the federal direct loan programs. Again, this is only for federal loan debt, does not include private loans, school loans. So this is only for the federal direct loan program. And it requires eligible loans, which is direct loan program, eligible employment. So while you're paying back your loans, you have to be working at a 501c3, which is a nonprofit, which most residencies are. So so that would be the second criteria. And the third criteria is qualified payments. You have to make 120 payments, and that is going to be 10 years. So the assumption is that you will be paying down your debt 10 years out. And at the end of that 10-year, any principal and or accrued interest, because those loans will be accruing interest, that's just like a credit card. You don't pay the balance, it accrues interest. Same thing with your federal loans. At the end of those 10 years, if you've met all the criteria, then your outstanding principal and balance will be forgiven. And that is a tax. It's a non-taxable event. There's other state-funded loan repayment programs. Many states sponsor, they need physicians at, community clinics. So it's very possible you go work at a community clinic for X amount of time, and for each year, they'll, forgive $10,000, $20,000, $30,000. It's variable across the country. Another example is the NIH, National Institutes of Health Loan Repayment Program. If after you complete your training, go to do a fellowship or additional training there, you can possibly apply for and receive some debt relief through those types of programs. Again, this is not an all-inclusive list. I just wanted to give you some examples of things that you might want to consider. Okay, so the financial aid process. And it's standard, but it's variable. So you need to pay really close attention to what the schools require. So complete the free application for federal student aid, or the FAFSA. And this is the studentaid.gov. And if you go to this website, it actually gives you everything that you want to know about eligibility for federal loans, the amount of federal loans that you can take, the repayment, the promissory notes, the entrance counseling, your rights and responsibilities as a federal loan borrower. There's a wealth of information there, and I didn't want to really go into a whole lot of detail here. But, this is for eligible citizens, so permanent resident or a U.S. citizen. There are a handful of eligible non-citizens. So if you think that you may not be eligible, you would check on this criteria here. And there's a handful. You could have a political asylum. You can be a resident of the Marshall Islands. There's just a handful that qualify. They're not really standard, but so if you think you might be an eligible non-citizen. Now, if you're international or a DACA student, you are not eligible for federal loans. So you do not need to complete this. And you will need to advise your financial aid office that you are not eligible to receive this. And then they will work with you to determine what eligibility you have for other sources. Many schools, such as Stanford, we require supplemental applications because for federal aid, you may or may not know this, is that for federal loans, you are considered independent. So the Department of Education doesn't care whether mom and dad are daddy Warbucks, or you come from a farm worker family. You are independent, so you can borrow federal loans regardless of your parental income or assets. They only look at you, and if you're married, your spouse as well. But these are all unsubsidized loans anyway, so it's really kind of a slam dunk for that. But some schools, like Stanford, we do require parental data. So we look for parents' income. So we use prior year. We're using 2019 taxes in their W-2s. So we collect the supplemental application. We use a CSS profile. We collect parental taxes. And we do have a Stanford Medicine supplemental financial aid application, which is more or less a attestation, meaning, what are your enrollment plans? Do you have any career goals, or do you have any work plans? Those. And it's also enables us to tell the student that you're getting the funds and they're to be used solely for educational purposes. You can't take your refund, which are meant to pay your rent, and go and stick it in the stock market. That's not, we don't monitor that, but that's not the purpose of financial aid. It's really to pay for educational expenses. So another thing that I didn't mention about the FAFSA is some schools don't have supplemental applications, and they'll say, just put your parental data on the FAFSA. It collects the data, and the Department of Education ignores it because you're professional students, but the school will still have it, and they may use that. So, at Stanford, we say exclude it, but if you're just applying to medical school, and some schools may need it, so you do want to make sure that if it's required by one of the schools you're applying to, that you put it there. At Stanford, we'll ignore it. We'll say, okay, they put it there, but it doesn't really matter to us. So make sure that all that information, you start early, make sure tax returns are readily available, have PDFs, et cetera, so that if you're offered a place of admission at a medical school, you can complete this application process and get it to them early and have them prepare a financial aid award offer to you. Of course, explore, as I mentioned, explore any and all scholarships that are available out there. Apply early. Most schools will not entertain or give you a financial aid offer unless you've been offered a place of admissions. But that doesn't preclude you from preparing early, so that in the event that offer comes, you can pull the send button, and that information will flow to your financial aid office. And then certainly after you receive financial aid offers, assuming you get multiple medical school offers, you'll be surprised at how different the offers are. Every year I get at least 20, this school gave me merit, and you gave me a need-based offer. Why doesn't Stanford match this? And schools don't do that. We don't match offers, at least Stanford doesn't. So, understand the financial aid that is being offered and understand the differences and how that applies to you. And ask questions, ask questions, ask questions. I learn a lot just by the questions that students ask me every year. And it's like, that school's doing what? We should be doing that now. So there's always room to grow, to change. And the other thing too is, the financial aid that you're offered, is it going to be, guaranteed every year? So, we'll go through the myths and the FAQs in the next. So we'll see how that, see if I answer some of those questions. Okay, so my colleague Jobin said, hey, as we were preparing for this workshop, he said, these are some of the questions that are coming in on the listserv for this conference, and can you address them? So I figured, sure, why not? So myths about financial aid, and again, not sure what happened to my fades here, but anyway. I have heard if you can't afford medical school, you won't be admitted. And that is false. All medical schools that I know of are need blind admissions. So they're really looking at your aptitude and your preparedness to be a medical student. So if you get admitted, then financial aid offers will follow. And again, they're not automatic. You need to apply. So that's a good thing that they asked this question, because just because you get an admissions offer, you need to take the next step and say, okay, now I'm really interested in the school. What financial aid will they be able to offer me? So take that next step. Most schools will reach out to you and say, congratulations on your offers. If you need financial aid, here's how to apply. Second is you're limited to how much loans you have to take. Well, yes, up to the cost of attendance. I did mention that there's an aggregate limit for the federal direct loan program of $224,000 over all careers, undergraduate, graduate, and professional school. So once you cap out at that 224, you'll have to go to the direct loan program. But you are limited to the cost of attendance. That is really the one thing that most schools, if not all schools, will work with you on. If you get another resource, let's say you take out 100% of your eligibility in loans, and let's say you get a $3,000 outside scholarship, in all likelihood, your loans will be reduced and that scholarship would replace that, which makes sense. If you don't know your specialty before medical school, you won't get student loans. That again is false. I'd say only 1 out of 10 students know exactly what they want to do when they finish medical school. Many of them explore their passion along the way. And, it's like they're doing a clinical rotation and all of a sudden, bam, I love this. I want to do this. So, yeah, so it really does not matter what your specialty is going to be. The only area that it might affect is, again, if you do your primary care loans, and also, let's say you're thinking of the National Health Service Corps, and they both have a loan and a scholarship program. And so if you're taking out those loans, you've committed that you're going into primary care. So again, something that you should think about. Do you have to work during medical school to pay off student loans? The answer is no. You should be working on medical school while in medical school, not worrying about your debt, although there may be opportunities for you to do some work, mostly in your preclinical years, because you're not seeing patients your first and second year, your third and fourth year, when you're doing your clinical rotations, you're on call, etc. That's when you really don't have time. So maybe during your first and second year, probably not in your third and fourth year. And your parents' asset count for your financial aid. And again, it depends. Depends on the individual school's policy. So we do collect parental data. We look at income and assets. We do a calculation. It's called the parent contribution. So let's say that the cost is $100,000, the parent contribution is $25,000, and then the financial aid that we would offer would be $75,000. So it's the difference between those two. That's kind of our calculation. If your parents are divorced or remarried, we at Stanford collect both sets of parent information. We exclude the set parent income, and then we have the assets, and then we add household A and household B together, and that becomes a parent contribution. So it really varies across schools. Become familiar. Some schools may be more generous with their financial aid, have a different formula, exclude one versus the other. I know oftentimes I've been asked, well, as an undergrad, my school only used my custodial parent. And we don't necessarily do that. If there's extenuating circumstances why we should consider the custodial parent as the only parent, then a student could appeal that with me, the director. But generally speaking, we will ask for both sets of parent information. And of course, if there is estrangement, then a student can also request an estrangement waiver, and or if they've been emancipated. I think that's the other area that is pretty common. Those are the common areas for estrangement, emancipation at a young age, estrangement, and issues about custodial parents. So those are things also to consider. All right, and then the 10 questions to get the financial aid discussion started, which I think we've covered most of these, but let's just go over them one more time. How much does medical education cost at your school? Again, varies widely, public versus private, and then also in-state versus out-of-state. And then, of course, if you're going to the Armed Services School, it's no cost because they pay for you. What is the average amount of debt for the most recent graduating class? I shared what Stanford's was. It was $105,000 for the graduating class of 2021. The national average, I believe, for private schools was 219,000. I think that's what I saw. So we're half of that. But the average for all schools is 20,000. So, if you have your mind set on going to a specific school, go to the website or go to the medical school application requirements handbook, the MSAR, which is published online. And you can look up individual school attributes. And one of the things they ask us to report on is the average cost of the first year budget, and also what the average graduating debt is. So you'll see all of that information located on the MSAR, the Medical School Application Requirements publication. Is a supplemental financial aid application required at the school? Again, parental data on the FAFSA may or may not be required, but as a first-year applicant, I would just put it on there just to be on the safe side. At Stanford, we use a CSS profile to collect parent information, household A and household B required for us if parents are separated or divorced. And we also have a supplemental application. And we also require parent tax returns. So again, it varies widely amongst schools. Do you require parental information for the financial aid package? Again, varies broadly amongst schools. At Stanford, we do. What scholarships and grants are available and when can I apply for them? It is, if you're interested in medicine now, it is not too early. If you're at a community college and you still have a couple of years of undergrad education, assuming that that's where you're at, I would start looking at all websites now, and I'll give you a link to the AAMC First program, which is my go-to to find out all information. They have an amazing staff that keeps a lot of information up to date and a lot of great videos and webinars. If I get a scholarship for 1 year, will it continue to be offered in subsequent years? So this is a good question to your, when you receive a financial aid offer. Is this scholarship that this school is granting me for my first year, is it guaranteed for 4 years? Some schools will guarantee it for 4 years. Or if all things with my family, et cetera, stay the same, income, et cetera, can I expect a similar award each year? So schools should be able to answer those simple questions for you. Again, does the school offer institutional loans, and are they more favorable than the federal loans? Maybe sort of question, what are the terms of the loans? And are they awarded each year similar to the scholarship? Are they guaranteed every year, or is there possibility that I may lose eligibility or they may not be offered? Again, at our school, these are revolving funds, so we loan money out, and students who have graduated are in repayment. They're paying money back into the pool. So it's not like an endowment where you make the investment and the earnings you never touch the investment or the principal, and you only work with the earnings. That's what we offer in scholarship. But at our school, the endowment is what pays for scholarship. And that can vary based on how the market's doing. But we pretty much will at least maintain our level of institutional aid. And if our endowment does better, we actually grow it. And how can I cut down on my yearly expenses and borrowing? I think the most important thing, of course, is lifestyle choices are things that you can control. Single housing versus shared housing. Those types of things will definitely help. Cooking in-house, packing a lunch versus eating out, paying at a cafeteria, or going out to dinner. All of those things can weigh heavily on your educational debt. And those are things that I think can cut down on your yearly expenses and certainly pursue scholarship opportunities if available. Okay. And do schools who are awarded the ANCC assistant program qualify for any additional financial benefits at your school? So this doesn't play into, again, it's specific to school, but I'll use an example again, using Stanford medicine, is if a student, we have a pre-matriculation event. It's called the SWEAT program. It's a Stanford Wilderness Experience. Gosh, I forget what the acronym is. But anyway, it's a hiking camping trip, the week before medical school starts. And there is a fee associated with it. The school subsidized it, but there is a participation fee. And if a student at our school, if the student has been granted the AAMC's fee waiver, then we will grant them a waiver of their participation fee. So that's an example of how we use it. Schools may use it differently. So again, something that you might want to pay attention to. And can medical students work part-time while attending medical school? I did answer that in the previous slide. At our school, yes, they can, because many of our students work as TAs, teaching assistants or course assistants, or community associates, and that's basically they can help course directors teach classes, prepare materials for classes, tutor classes, etc. Usually, second year students will tutor first year or TA first year classes, and so schools have different programs potentially available. I can speak to what we offer. Other schools may call it work study, but we do have the ability at Stanford that students in at least their first 2 years can potentially offset their educational expenses, e.g. their borrowing by being a TA. At our school, they are merit-based. That means you have to apply for them, and they're not guaranteed. So again, start looking at what opportunities at schools that you're applying to have available for you. Okay, so here are the next steps, and I think we'll finally wrap it up and be ready for additional Q&As. So in my opinion, and a lot of what I've presented here is taken from the AAMC's first website. And this is the Financial Information Resource Services and Tools first website. There is a, you can become a member of the AAMC. You just have to create an account, and that will give you access to a wealth of information, including the Aspiring Docs Network, which has lots of information and events that can help guide you through the medical school application process, and then if and when you get into medical school, your medical school journey. I mentioned the medical school admission requirements for applicants and our online database. Again, looking at individual schools that you might be interested in and seeing if those are good fits for you. I like to say that all medical schools, any place that you get into is wonderful, because all medical schools have to be accredited by the Liaison Committee on Medical Education. And so they have to meet, certain criteria and requirements. So I think that, if you get into medical school, and meet that challenge, you should do well. I highly encourage you to visit all schools' website you're interested in attending and see what their financial aid has to offer. And again, more information you learn about where you're going is going to only be more useful to you. As I mentioned, become an active member of aspiringdocs.com, which is at the AAMC website, the first. And, once you get in there, you're going to have a tremendous network of individuals that want to help you succeed in your journey. And of course, your college's pre-med advising staff, they have most likely been doing this for years. And we'll have a network of resources and information hopefully available to you. Okay. So with that, I am open for questions. And let me I guess I could stop my share.
So
and then see.
First question is, what happens if you get a scholarship after taking out loans? Can it be kept as saving or used for personal expenses?
Well, so if scholarships are usually sent to the school, and we will apply them against your financial aid. So let's say you're in a semester medical school. We're quarter-based, but I'm going to use a semester. And here's autumn term, and all of your loans have been dispersed. And funds are usually dispersed at the beginning of the year, at the beginning of the term. So you don't get a paycheck like every other week. So you get your money at the beginning of the term. The university usually pays itself first, and any excess funds will be sent to you as a refund for your living expenses. So if you're off campus and paying rent, you use that money to pay rent, buy your food, etc. If you're living on campus, those monies will be applied towards your student bill first, and any excess will be refunded to you. So here comes November, and you're giving up. You got that Weigel $10,000 scholarship. Yay. And you want it applied in spring semester. So we've already funded you for your $100,000, $50,000 autumn, $50,000 spring. So what we would do is we would reduce your loans, starting from the worst loan, which would most likely be the Grad Plus loan, then your unsubsidized loan, and then possibly your institutional loans. So we would reduce your loans, and that scholarship would replace it. You don't necessarily get to make money while in medical school. So that, one of our goals too, as directors, as financial aid staff, is to try to reduce your indebtedness. So that scholarship reduces your indebtedness. So that really is one of our goals. That was a great question.
Does Stanford or any other medical school turn people away for not being able to afford it?
So financial or admissions is need blind. So again, you're going to get into medical school. You'll get an admissions offer based on your merit. Once you get admitted, and you say, "Yes, I'm coming," you could either make that decision. Yes, I'm coming. I don't know how I'm going to pay for it, but I'm coming. So no, you want to, between the admissions season and the admissions deadline, which I think is April 30th, you need to have financial aid available to you so you can make an informed decision about, okay, Stanford is my dream school. I'm not getting great financial aid, but I'm okay taking loans because I'm going to be a neurosurgeon and I'll make bucks at the end, and I will be able to repay my debt. I mean, there's that kind of mindset, but you need to know before you need to know what support you're going to have before you make a decision to matriculate.
Okay.
Did that answer the question, I hope?
Yes. The other question was, you said that students at Stanford get TAs and courses. How much is the fee for that, or how much do they get paid?
Oh boy, Stanford pays really well. The most lucrative TA that you can get as a second-year student is TAing the anatomy class. So as a first-year student, first quarter, you take anatomy. Autumn. So we're quarter-based. So there's three terms in the first year: autumn, winter, and spring. So let's say you take anatomy your first year, you do well. I would say that you're auditioning to be a TA in your first year, because if you apply for it and get selected for a teaching assistantship in your second year, you get a 50% TA, which is equal to, and these are approximate, so $22,000 in autumn, and that payment comes in two forms. One is going to be a tuition credit of about $11,000, and then salary. It's not a stipend. You earn this every other week, like a paid employee of Stanford. So you get a salary, and that resource could potentially reduce your loans, or would in most likelihood. And then the second part of that assistantship is in winter term, which is at 25%. So it's basically half of the tuition credit, half of the salary. And they hire, there's 90 students per entering class in the MD program. And we also have an MSPA program. I think there are about 33 per entering class. So that's what, about 120 students. And I believe they hire 12 TAs. So, you don't make bank on it. Basically, it covers expenses. And if you get, if you're on need-based financial aid and have a loan component in your package at Stanford, we would cancel the loan component of your financial aid award. So we would adjust your financial aid award. But this is, I don't know what other schools do. I'm not familiar with what other schools, how they teach their courses, or these opportunities are available. But again, TAs are not, they're merit-based. You have to know your material. You have to be good at it. You have to apply, and you have to be selected. So they're definitely not guaranteed.
Okay. Will parental finances be used for non-traditional students over 35?
At Stanford, yes. So that's called independent status. In the past, we had waived parental data for students who turned 30 as of December 31st of the year, the academic year. But we've waived that because we have an expanded financial aid program where we basically all students, regardless of age, will be treated equally. So it depends on the school. I do know some of my colleagues across the country do have age waivers where they will exclude parental data. Our current policy at Stanford is that we will include regardless of age, whether you're a non-traditional 35-year-old second career student, married, coming back, unless there's, again, you can petition for a waiver if there's extenuating circumstances. I certainly would entertain those, but as a general policy, we will include parental information. And that's because, there are students that have family wealth. There's, parents own a business or, they have wealth, they have income and assets. And so the student is applying for need-based aid when, as I mentioned at the beginning, is, policies differ across schools. But again, I use mine as a reference, my school as a reference, is that we look at the family, the student and the family, assess their financial strength to determine if they qualify for, quote, need-based aid. Again, this is for need-based aid, not merit aid.
What good resource website to use to find external, not school-based or service-based scholarships?
The AAMC First website, they have a scholarship database there. The other thing too is, if you become a member of the Aspiring network, they will also, in all likelihood, share information about external scholarships. If you visit our website, which is open to the public, you can access it at med.stanford.edu. Just go to the medical and then financial aid website for the School of Medicine. There's 4 financial aid offices at Stanford, so Central, Business, Law, and Med. So make sure it's the Med one. And then if you just financial resources, and there's an external funding database. And as students receive scholarships and they haven't been part of our database, we add them to the database, and you can certainly use that to peruse that. UCLA has a website too. It's called Pennies from Heaven. I haven't visited it lately. It's very similar to ours, but they do the same thing. They maintain, external scholarships available to their students. And with us, we certainly will, as scholarship materials become available, we broadcast them on our weekly newsletter, our OMSA Office of Medical Student Affairs newsletter. Again, once you're in medical school, we try to push out that information as often as possible.
The other question is, for parental financial information, if a student has a single parent without the know whereabouts of the second parent, would they be required to provide that information?
We would want to know single, never married. So, father unknown, or, whereabouts unknown. Yes. So most schools will ask that, but we also have begun to recognize that single parent is also a status, and generally we accept it without further question.
Do you think that med school, this is actually I have an answer to this one too, but I'll let you go first. Do you think that med school is worth it for your experience, considering the stress and that that was accumulated? I'll let you go first.
Well, I think that anybody that goes into medicine is not doing it for the money or for the, or yes, debt is most likely going to be a factor in your training. You're doing it because you have a passion, either for the science or for the community, and you want to make a difference. That's just my general opinion. I think as as much as I know about repayment, yes, you're going to get into debt, but you're going to be able to manage that debt quite successfully. And as residency, yes, you're going to be living on a tight budget and residency and making payments. But once you become an attending or start working, your lifestyle is going to change, and 10% of your income is going to be used to basically service your debt, and the other 90% you're going to have as discretionary income to live, to purchase a home or do things of that nature and build your wealth for your future. So it's not just the immediate. It's a long haul. 4 years of medical schools, up to 8 years of residency, and then only after residency then you start seeing the returns. But I think that people you need to go into medicine for the right reasons, and if you do, it'll pay for itself.
My thing is that so if this is California now, if you live in another state, first of all, that question is, I think you're the only person that could answer if the stress, the work is worth it. Nobody can really answer that question for you. But I also say that most people in California make about $70,000 if you have a college degree. They go out and they take out a $500,000 to $600,000 loan out to buy a house. Whereas in medicine, you may take out $200,000 loans out if you don't get any scholarships. And the lowest amount of a general practitioner in California, they make about $200,000 a year, and your salary goes up about 5 to 10% a year. So is it a good investment? I mean, considering that if you get a job out of college at $70,000 a year, your income goes up about 2% with COLA raises and everything else. So I don't know.
Yeah, Ben Franklin's his famous statement is education is the best investment. Right. You can invest in the stock market, but you invest in your education, and certainly the services you provide, it'll definitely pay in returns. And yes, I think that medicine is stressful. I mean, I see it with students, but there's also a very good support network at medical schools that I think are often available to help students navigate through those trying times. So, we have an office of wellness events, resources that are available to students. There's learning specialists if they need strategies for studying. There's tutors if students need it. So there's a variety of resources. I think medical school administrators know that medical school is stressful. And again, I think most medical schools will have a support network in place to bolster you up and support you through that journey. And yeah, I agree. Is that once you make it, I think the dividends will pay. Your work will pay well.
And unemployment for physician is so low that the Department of Labor doesn't keep track of it. So, anyways. The next question is, if you have leftover loan money, can you return it so you don't have to pay interest? If so, does that apply to undergraduate loans?
You can, so for basically any loan product out there that I know of, is prepayment, there's no prepayment penalties. So you can make payments at any time. The thing is, though, is the payment you make will always go towards any interest on the loan first, and only the principal will be reduced if you make excess of the interest payment. So yes, there's no prepayment penalty if you are able to, say you start medical school and you say, I have no idea what my spending patterns are going to be. I moved out of state. I have a roommate now. I let me figure this out. So you take out the maximum, and at the end of the term, you say, wow, I still have $5,000 at the bank. That's money I didn't need to borrow. So you can do one of two things. You could return it. The school can return it on your behalf, which is what we like to do. We like to return it on behalf of the students. So we return the money to the Department of Ed, and then the student then, instead of his refund, will get a bill through the university for, let's say, $5,000. And then they use that excess money to pay the university. That way there's a nice clean trail of, we know exactly what's happening with the loan. That's the way we handle it. But you as the consumer, you can use that money to, again, pay down. Maybe you have a credit card debt that you carried into medical school, which is also another thing that you shouldn't have because you are on a fixed budget in medical school. But let's say you did have you needed to use a credit card for, to fly for your interviews, and you racked up 5,000, and now you have this 5%. Let's say your credit card is 15% interest, and now you have this federal loan, which is 5%. So it makes sense that, hey, let me take this excess money and pay that credit card down, so it's not accruing 15%. And now I still have, I use that loan, federal loan, 5%. So, that's just strategically using it. But again, just depends on where you're at with your, with your loan debt, personal loan debt. But that's an example of what I would do.
This is another one. I am my mother's caregiver, and I have no idea we should keep her important documents because she's diagnosed with dementia. What would I need from her? And then also my father stopped working a long time ago, and he's 88, and he had no part in raising me. What do I do with his information?
So a couple of things. With the mother, I would assume that she's on SSI. So we would just need a statement saying that she's on SSI. And that would basically say that, that they're not working and being supported by social services. And then for the parent, the absent parent, if there's contact, even if let's say the father was estranged and didn't have any part in raising the child, but let's say they still had contact with the student, we would ask them to reach out and say, hey, we need your parental data to determine your financial need-based eligibility, and can you provide your father's data? If absolute estrangement, and if there's just like this, bad blood, or just a negative relationship there, it's not our intent to create tension. But if there's really estrangement, then we would waive it. But we would want the student to at least attempt to get the information for the first time, and then like for subsequent years, we'd say, yeah, we'll just waive it from here on out because we're not going to get anything. So it just depends on the school and the situation. But if the relationship is such that it just is contentious, then you would speak to the director of aid or the financial aid advisor and kind of see what would be the requirement.
This is another one that was posted. Is what if your parents are on Social Security and retired?
Yeah, you would just indicate that they're on Social Security. This is their income, or they're drawing a pension from their work. Just that would be it. They just provide that data.
All right. The other question is, can you do any other side job besides TAing while in medical school?
Oh, I'm sure you could, and I'm sure students do.
There's no law against it.
There is no law against it, but really, what our policy is, and this is really to protect the student, is we allow students to do 25%, which is 10 hours a week above their academic course load. That is the work limit. And again, this is just a safety net because you basically, you're either going to medical school or you're working. You can't be doing both. Medical school is a full-time job. So the answer there is there are students, I say they have a S tattooed on their chest because they're super people. Anybody who gets into medical school, it has an S, by the way. But I think also is, there's students that are really, proficient at, learning and can multitask and do things. There's students, the community associates at Stanford. So these are graduate students, they live in graduate housing, and they're responsible for getting their resident housing community, kind of being like not the landlord, but they kind of like make sure there's social events, and if there's any issues, they kind of are the go-to person. And those students are hired by the vice provost from the university, and they get paid $1,100 per term. So they can make up to like $4,400 for if they're there all 4 terms. That's an example. But yeah, I heard of an example of a student who was before medical school was an engineer with Google, and they hired them to do some consulting work. They paid him like $100,000. And like, wait, the student's in medical school, he shouldn't be working. But there's examples out there like that. But if you have a skill, a talent, and it doesn't distract from your progress in your academic work, you can explore that. But I don't think that it's recommended.
I think my favorite quote was, "You could have as many side hustles while you're in medical schools as you want. There's no law against it. The only time it becomes an issue is when you start failing. Then there will be a very different discussion about your future in medical school." Anyways, do loans require credit card scores? I have a debit card and I'm yet to get. I have debit cards and I'm yet to get a credit card.
Well, credit card is not required. However, I think it is not too early to start building your credit score, because your credit score, the maximum is 850, and as you build a credit history, I have a 24-year-old daughter who graduated a couple of years ago, and I told her, I said, get a credit card, get a credit card, get a credit card, and she goes, why? I have my debit card. I don't need a credit card. I said, but you're building credit. I tried to get one. It's to build your credit score. And so she graduated, got a job, still didn't have a credit card, and wanted to get an apartment. And they said, okay, well, we're going to run a credit check on you. And they said, well, you don't have any credit history. We don't know if you're a good risk or not. I said, that's why you should have gotten a credit card. So it is a good idea to get a credit card. Use it like you would your debit card, and then pay the balance every month. That's what I would do. And that helps build your credit score. And it's also important to build that credit score. So if and when you take a Grad Plus loan, Federal Direct Grad Plus loan, then that would be available.
Awesome. If anybody doesn't have any more questions, I'm sure Ms. Trujillo wants to go enjoy her Saturday. One of the other things I was going to let you know in the chat, we typed a lot of things and links and also other information, and we're going to keep the session open for a few minutes so you could download that, just cut and paste it, because that's not going to show up under recording, and there's no way that we could get that information from you. So before we end the session, cut and paste anything you want from the chat. Another question came in: for non-traditional students with bad credit, what is the minimum score that we should be aiming for to enter medical school for Grad Plus loans?
I don't have the answer to that because I don't know. I really don't know, but I would recommend no lower than a 650. Because that is kind of like the yellow zone. That's like, you can improve on it. It's like, income to debt. And it's based on, your credit history, your derogatories, late payments, outstanding balance to income. I mean, there's, a variety of factors that go into your credit score, but, work on paying down any outstanding balances, starting with the ones with the highest interest rate to the lowest interest rate. Even if you make minimum payments on let's say you have a large balance on a loan or a credit card with 9%, and then you have a small balance with a 21%, pay that 21% down first. Always, strategize your payments to pay down your most expensive debt first, and then your lowest debt.
Very cool. I also put a link where you could get your free credit report and score on FTC. You could get it every year for free. You don't have to pay anything for it, and highly recommended that you, as a personal financial person, you should do it every year. So make sure bad things don't magically end up on there. And you could get it one every year for free.
Yeah, the thing also with that, it's good to check because identity theft is that you want to make sure that, wait a second, it's I remember getting a letter in the mail saying, sorry, we declined your application for this credit card. I'm going, wait, I never applied for that. And then I investigated it, and sure enough, and those type of derogatories, if you're declined, that affects your credit score. So you need to clear those up. Definitely, that's a great advice. And also, most of those websites, whether it's Experian or Trans, blah blah blah, they'll give you information on how to improve your credit score. So it's always a good idea to do it. I usually do it on my birthday. So I just remember I schedule my dental cleaning exams. Everything's around my birthday. So
yeah, I usually do it at the end of December. I usually get a free credit report. And I checked it, and somebody opened a landline, which who opens landline anymore? But anyways, they did that, and then so I ended up fighting. I was like, that's not me. I've never lived in Kansas. So yeah, it's and somebody suggested download the Credit Karma app, which I've never done it personally. I just do whatever the FTC and the annual credit report does. But yeah, I'm sure there's an app for anything these days. So I'm sure Credit Karma or whatever, you could check it as well. The only thing is, I heard that if you check your credit score too much, that's a ding against your record. So if you do it every month or something, but if you do it once a year. So I don't know. And those are all informations that I'm not really too sure on. But
yeah, it's like financing a house, refinancing is that you want to refinance, and they'll say, okay, we want to run a credit check, a soft credit check on you. That means that it won't affect your score. So there's all these little nuances that you have to be careful of. But yeah, once a year, good recommendation.
All right, so we don't. Oh,
I just wanted to say thank you before I sign off. I also am happy to entertain, individual personal questions. So if you want to, after send me an email. It's just mtrujillo, no O, at stanford.edu. So M as in Martha, and then TRUJILL at stanford.edu. And I do this, just about for anybody who reaches out who is interested in medicine. So, if I can help along the way, feel free to reach out. I really appreciate everybody's time today.
All right. Thank you very much for your time doing this on a Saturday. I know that it was a little bit challenging to get your schedule, but I really appreciate you for coming on a Saturday morning. Certainly after Dr. Gibbs talking yesterday about getting in, and so it worked out really well. And thank you again for coming and your friendship and